And on today's show, our short-term and long-term disability insurance. Part 2 of this week's series on Disability Insurance Awareness Month for 2014 with disability expert Tim Kukeza. Hi everyone, I'm Steve Savant, syndicated financial columnist and contributing author to Backroom Technician in Innsmouth. Let's get down to business. Well, welcome to day 2, Tim.
Thank you, Steve.
We're talking with Tim Kukeza, who is the DI gun of the entire United States of America. Is that too big?
That is a little big,
okay.
Yes.
But let's talk about this segment because I really think I want to sell America today on the issue of short-term disability.
Okay.
If I can't do long-term, if it's out of my budget, I want to at least say, let's put something in there, but at least have a basic cornerstone or foundational thinking. When I think of short-term, I think of what period in time? Is it 2 years, 4 years, 5? How far out is short-term?
Yeah, I mean, typically what I would look at is a 2-year period, and that encompasses a lot of disability occurrences if you get to 2 years.
So are you saying statistically that's right within that framework?
Yeah, when you look at the statistics, you look at like 30 months, okay? So 2.5 years. So if you get 2 years, and the nice thing about even having something at that point in time, if you've got 2 years to adjust your lifestyle, okay, and you know that after 2 years this policy may stop paying or is going to stop paying, boy, you've had at least some time to adjust your lifestyle, and you've gotten through those 2 years. So if all else fails, I love the idea of having at least a 2-year benefit period, no question about it.
This is one of the things I want to talk to our advisors direct. This is, if you have to have something, we should have the minimum amount of disability insurance. I'd be looking at short-term disability. Now, there's a lot of duration periods here. What's the short? I think you told me what's the shortest I could go to start this DI immediately?
Yeah, you can go to a 0-day accident, 7-day sickness type of policy with a short-term standalone policy.
No elimination period.
On a 0-day accident, that's exactly correct.
So I could have a 2-year, day 1, I'm in.
Day 0 accident, that's exactly right. With a 2-year benefit, you can go to a 7-7, so 7-day sickness, 7-day accident. But when you do that short of elimination period, typically from a premium standpoint, you're going to want to back down that benefit period because as you can imagine, if you have a 0-day accident and a 7-day sickness policy, then you're going to see a situation where the premium is going to be a little bit more than a typical DI policy.
So if I'm an average American and I have maybe 60, 90 days in cash reserves, and I did a 2-year disability. I love your thing about it gives you lead time. I know it's coming.
Yeah.
I'm going to have, at least I can adjust my lifestyle. I like the ability to have at least something. And this is why I'm just coming to our advisors today saying, let's at least do short-term, if nothing else, to give some kind of foundation. Now, when I'm talking about it, how far out would you say? I know you said 2 years is the typical. Can I go any farther than that?
On the typical short-term plan, the idea is that you want to go to a shorter elimination period, and really that 2-year benefit period, if you're going to go to a 7-day accident, 7-day sickness, tends to be the longest benefit period that you're going to get with that kind of policy.
Let me ask you about the sickness, because the DI I get, hey, I get injured, I get that. What about sickness? When I think of sickness, am I talking I'm in the hospital sickness, or what kind of sickness is going to cover my disability?
Well, when you look at, again, statistics, the majority of all disabilities are sickness related, okay?
Not accident.
No. But when you talk about sickness in the disability world, you're talking about heart attacks, strokes, cancer, and those types of things. So again, it's not you falling off of your bicycle. It's going to be the majority of the time it's you suffering some of that heart attack, stroke. And we now know with medical technology today, people are surviving those incidents much more often than they've done in the past. So yeah, I have a heart attack, I've survived the incident, but I'm going to be out for the next 6 months recovering. So that's where a typical plan is going to come into play. And boy, is that nice to have that benefit paid to you during that period of time.
Yeah, I think that's a very huge point you just brought out, because I think most people think of DI as, hey, I had an accident, or I had I was a sports injury. But really, it's mostly these illnesses like cardio and stroke and cancer and things like that. We come back from the break. I want to talk about long-term disability. And Tim mentioned something in yesterday's show that I want to really jump on. Wow, we're now going past age 65 on some of these carriers. To me, that's really interesting. We'll be right back after the break. Back in the day, life insurance professionals were called field underwriters. Then, carriers trained their field force in the basics of life insurance underwriting. Today, the insurance industry doesn't educate the agent population as they once did. But now you can have the Informed Risk Guide at your fingertips so you can illustrate a reasonable rate class for your life insurance prospects. Just request your copy of the Informed Risk Guide at downtobusiness.ashbrokerage.com. It's free from Ash Brokerage, the practice enhancement company. Well, welcome back to our second segment. I'm with Tim Kukeza, the DI expert, and I have to say, long-term disability has really changed in my view. So many things are happening. When I'm thinking about long-term disability as an exec, when I'm thinking about it as a key employee perk that I want to give, it's an attraction, it's a recruiting technique, it's a retention technique. I love the benefit. And when I get into when I got in my 50s, I got much more serious about my DI contract. I don't know what happened. I just became mature for overnight. Let's talk about it. Give me the basics of the long-term disability, and then I want to talk about this post-age 65 DI. I love that.
Yeah, you're talking about the benefit period there. But even so, in that situation, a lot of the carriers now have gone to a 2-age 70 benefit period because understanding that people aren't retiring anymore at 62 or 65. They're working past those years. So the carriers over the last number of years, first they started with a 2-age 67 benefit period, understanding that people wouldn't qualify for Social Security until 67. And now they're pushing that out even to a 2-age 70 benefit period. So if you become disabled, you may get benefits all the way out to 2-age 70.
Well, when I think of age 70 now, do a lot of the carriers then go to 70 or only a few?
Well, you're talking about two things. One is you can be talking about a benefit period of 2-age 70, which really all of the primary white-collar carriers either have that 2-age 67 or 70 benefit period, so they're all looking at that.
So they're all there pretty much on that.
But then the flip side of that is the issue ages, okay? So what you're seeing now is the issue ages for some of the carriers typically used to be 59 as an example, but some of those carriers now are pushing out their issue ages into the early 60s of issue ages, even to the point where MetLife is going to a 2-age 70 issue. No, let me just stop you there. Most of the group DI benefits that I've seen on go to age 65. So if you they're putting their exec's going to get a 6-figure, he's making 6 figures, he's going to get a big chunk of change for that. But now you could actually when you get past the group and they're no longer offering it at that age and you're still working, you can pick up DI post 65. Yeah.
See, to me, that's a mind blower because we didn't have that when I started in this business.
It's interesting to see that transition over the last number of years. Now, the one situation you're going to run into is the health of the individual in terms of making sure that they can get underwritten. But I will tell you, we've seen a couple cases recently where people that are into their 60s applying for disability, and those cases went through, pretty smoothly. You know, so you've got people.
I think it's changed. I think it's changed more, and I think I think it's a myth. One of the big myths is, you know, Steve, I can't really read these DI contracts. You have to be an attorney to read it. And not only that, but the physiology gauntlet that you have to go through for underwriting is just so much. And I think all this has changed.
Yeah, it's gotten over the last number of years. You know, there were some medical issues that were problematic, the diabetes, the mental nervous, and things like that. And the carriers are still working through some of those things, but they're figuring them out every day. You know, they're trying to issue these policies, and they're trying to figure out ways that we can provide disability coverage to those people who are applying, even if they have some medical issues. So it's really turning a corner, and things are getting to the point where you're getting to see policies issued, and carriers are figuring it out.
Tim, talk to me about ONOC, because now we're getting to specific vocational skill sets. And to me, this is really a huge area to go into, especially for attorneys, physicians, so forth. Talk about ONOC.
Yeah, there's the ability to still get that true own occupation definition out there. So that own occupation definition is going to allow you that if you become disabled as a surgeon, as an example, so I'm a surgeon and I can no longer perform surgery, the ONOC definition is going to allow you to become a general practice type of physician. So I can't use my hands for surgery, but I can still be that general practice.
So you're getting your full disability as a general practitioner.
I'm getting my full income as a general practitioner, plus I'm getting my full disability benefits based upon
because
me
of that
being
skill
a surgeon.
I lost.
That's exactly right. So
Wow.
It's protecting me as a surgeon, even if I stay in the medical marketplace and continue to earn an income.
If we have physicians and consumers watching this show, which we do a lot of times, would they be able to deduct that if they wanted to do that? Could they deduct their DI premium? Is that okay or no?
Depending upon the type of business that they have set up in terms of that. So if you're an employee, typically you're not going to be deducting the business or the premiums for that. If you are the employer, based upon how you're set up, a C Corp, an S Corp, there is the possibility of deducting those premiums as a business owner for the policy premiums. Now, the thing that you have to be aware of, though, is if you're deducting those premiums then the benefits are going to be received as a taxable benefit.
Okay, that may be a trade-off for a physician. He says, listen, I'm already in the tax bracket I'm paying. I'm going to go ahead and lock down my protection. I'm going to take the deduction because at least I get something out of it. And then if I have to pay for the ordinary income tax a bit on the benefits, I think I'm okay with that because that may overcome the price tag. Before we leave, I just want to think, in ONOC, besides the big ones that we talk about, attorneys, physicians, any other area that we should look at as an advisor?
The ONOC definition is available for multiple occupations out there. So you can get a true own occupation if you're an architect, if you're a salesperson, okay? So it's available for other occupations. The question that I have for the producer in that situation is that benefit language, in terms of the premium that you're spending on that, is your client going to receive a benefit associated with, if I can't be a salesperson, what else could I do and still get an income and not be a salesperson?
I was just thinking to myself, okay, I can't speak anymore for the show, but I still could do illustrations.
Yeah, but if the speaking is the biggest part of what you do, then the own occupation definition may be something that you want to have on your policy.
Well, I'll think about that when I talk to my sponsor of the show. Well, that's all the time we have for this show. Remember, before moving forward with any of the ideas you hear on our show, always consult your tax advisor, legal counsel, or your broker-dealer compliance department. Missed an episode? You can hop out to our site at downtobusiness.ashbrokerage.com. And remember, you could be wiser as an Ash Brokerage advisor. I'm Steve Savant. See you.